Elon Musk in 2011 laughed at Chinese giant BYD's products and dismissed the company as a threat. But more than a decade later, the tables turned. BYD dethroned Tesla as the top EV maker in the fourth quarter, selling more cars than its US rival. Is China's aggressive push in the EV market sparking a global automotive war, or is it a response to Elon Musk's insults? Let's find out. Have you seen this car? Musk infamously joked about BYD's car. He further commented, "I don't think it's particularly attractive. The technology is not very strong. And BYD as a company has pretty severe problems in their home turf in China. I think their focus is, and rightly should be, on making sure they don't die in China." But BYD did not get wiped out. Instead, BYD sold more cars than Tesla in the last quarter of 2023. Their goal was to be China's largest auto manufacturer and put China manufacturing on the map, Taylor Ogan, CEO of Snowball Capital, said of BYD's long-standing ambition. So, how did the Chinese company, which began by making phone batteries, become the electric car giant? The statistics behind this market shift are quite revealing and will be discussed in detail. But first, let's look into how BYD managed to outpace Tesla in this highly competitive sector. The surge in China's EV industry and its growing global influence is a significant development in the automotive sector. By the end of 2023, China's electric vehicle market scene was buzzing with action. The country cranked out a whopping 8 million EVs, making up a solid 25% of all its car sales. That's a huge leap from what's happening in places like the EU and the US. This boom in China's EV market has a few secret sauces: big-time government subsidies, a bunch of smart engineers, and a growing demand for green cars. And even though the government stopped a major 11-year subsidy program in 2022, local support kept the EV dream alive and kicking. China isn't only ruling the EV market at home, it has also become a big player on the global stage. In 2022, China made nearly 60% of the world's EVs, including both the all-electric and hybrid kinds. And talk about choices, Chinese companies have about 90 different EV brands, with prices that go from pretty affordable at around $5,000 all the way up to luxury levels at $90,000. This smart pricing move is making Chinese EVs a hit in markets worldwide. However, the rise of China's EV industry also poses challenges and concerns in the global automotive sector. The transition to EVs, which generally have fewer parts than conventional cars, could lead to job disruptions in traditional automotive industries. For example, in the United States, the transition is said to endanger thousands of jobs among the United Auto Workers trade union members. However, in response to China's EV surge, countries like the United States and the European Union have set ambitious targets for EV sales in the coming years. The EU plans for all new cars sold to be electric from 2035, while the US aims for 2/3 of new cars sold in 2032 to be electric. But how has China reached this level of global dominance in EVs? The Chinese government's early focus on transforming its automotive industry towards electric vehicles has been a key factor in this success. Since the early 2000s, China has shifted from producing internal combustion engine vehicles to focusing on EVs. The Chinese government recognized the potential of electric vehicles to gain a substantial share of the global automotive sector and to address domestic issues like street pollution. As part of its strategic approach, China prioritized electric vehicle technology in its 5-year plan. As early as 2001, the appointment of Wang Gang, an auto engineer and EV enthusiast, as the Minister of Science and Technology in 2007 further accelerated China's push into electrification. One of the critical advantages China holds in the EV market is its control over the supply chain for essential minerals and the production of EV battery cells. With over 80% of EV battery cells being manufactured in China, the country significantly influences the global EV market. This dominance in the battery sector is further bolstered by Chinese companies' advancements in lithium iron phosphate LFP battery technology. LFP batteries, while historically less energy dense than their counterparts, have seen performance improvements, narrowing the gap with other battery types. In the global market, Chinese EV brands now represent approximately half of all EVs sold. UBS analysts predict China's global market share will nearly double to 33% by 2030. This growth is expected to come at the expense of traditional Western automakers, whose market share is anticipated to decline from 81% in 2023 to 58%. One of the key players in China's EV market success is excessive sales of BYD EV cars. It has emerged as a leader in the industry, facing challenges from Tesla-led price wars, yet maintaining a strong market position. BYD's chief executive Wang Shangfu co-founded BYD with Build Your Dreams, his cousin in Shenzhen in 1995. The company made a name for itself as a manufacturer of rechargeable batteries used in smartphones, laptops, and other electronics that competed with pricier Japanese imports. It started selling its shares on the stock market in 2002 and diversified by purchasing a struggling state-owned car manufacturer, Hinshuan Automobile Company. Since 2008, BYD has counted veteran U.S. investor Warren Buffett's Berkshire Hathaway as a shareholder. Analysts say BYD owes its growth to its original business, batteries. They are among the most expensive parts of an EV, and making them in-house saves BYD a lot of money. Many of BYD's competitors rely on third-party manufacturers for batteries. BYD's battery business helped to give it flexibility to cut prices sharply at the end of 2023, lifting sales, which jumped by 70% in December alone. Additionally, in 2023, BYD's sales hit a remarkable 1.57 million EVs, proving China's growing dominance in the global EV market. Then, BYD's expansion into the European market was another strategic move that underscored the company's commitment to global growth and the increasing importance of the European EV market. BYD is taking a bold leap into Europe with its first passenger car factory in Szeged, Hungary. This move is a game changer, signaling BYD's ambitious push into the European market. The factory is set to be a job creation powerhouse, offering thousands of opportunities and boosting the local economy. With state-of-the-art production lines and advanced automation, this facility aims to be at the forefront of new energy vehicle manufacturing. BYD's move into Hungary marks a significant milestone in its global expansion strategy. Hungary's strategic location in the heart of Europe, its rich automotive industry history, and well-developed infrastructure make it an ideal location for BYD's European operations. The country has been chosen by several premium European manufacturers for passenger car production, which further supports BYD's decision. The new factory in Hungary is set to play a crucial role in BYD's efforts to penetrate the European market more deeply, complementing its existing electric bus manufacturing plant in Komárom, Hungary. BYD's European strategy also includes expanding its retail presence across the continent. The company has already established 230 retailer stores in 19 countries and introduced 5 new models spanning various vehicle segments. In the next 12 months, BYD plans to launch 3 more models, indicating a robust and diverse portfolio for the European market. This expansion aligns with BYD's global brand vision to contribute to the green transformation of the global energy structure and to cool the Earth by 1 degree Celsius. Even Tesla's success in China contributes to the country's leading position in the global EV market. Tesla's Shanghai Gigafactory plant achieved a significant milestone by delivering 947,000 vehicles in 2023, a 33% increase from the previous year. More than half of Tesla's global deliveries in 2023 originated from the Shanghai plant. This highlighted the importance of the Shanghai Gigafactory as not only a production hub for the Chinese market, but also as a central export center for Teslas globally. The factory has achieved an impressive localization rate of over 95% for car components used, demonstrating Tesla's commitment to integrating into the Chinese market and optimizing its supply chain. In December 2023 alone, Tesla China posted its second highest monthly record with 94,139 wholesale units. This represented a significant year-over-year and month-over-month sales improvement, illustrating the growing demand for Tesla's vehicles in the Chinese market. The Shanghai plant's performance, particularly in the fourth quarter of 2023, where it accounted for over 51% of Tesla's global deliveries, indicates that the facility is operating at near full capacity. Tesla's continued investment in Shanghai, including the launch of a new megafactory project capable of producing 10,000 megapacks a year, signals the company's confidence in the Chinese market and its commitment to expanding its production capabilities. Finally, let us show you the data we promised in the beginning of the video. Chinese company BYD sold more electric vehicles than Elon Musk's Tesla in the last 3 months of 2023, as the two battled for the top spot in the sector. BYD has sold a record 526,000 battery-only vehicles in the final quarter of 2023, but in its competition, Tesla delivered a record 484,500 electric vehicles in the same time period. However, if we look for the whole of 2023, Mr. Musk's Tesla still sold more at 1.8 million compared to BYD's 1.57 million electric vehicles. But BYD, alongside the EVs, also sold about 1.44 million hybrids. Also, Tesla's gap over its BYD, at about 230,000 units in 2023, has significantly reduced than the 400,000 units posted in 2022. In January 2024, Elon Musk, in an attempt to cover Tesla's shortcomings, tweeted that the company had the potential to achieve 2 million deliveries in 2023, but the firm cut prices repeatedly to impress the buyers. However, given the stats, the automotive war is still on, and recent developments position BYD as a rising force in the EV market, is further intensifying the competition between these two industry giants. That's it for today's discussion. What's your take? Can China win the EV race, or can Tesla make a comeback in 2024? Share your thoughts in the comments. For more insights, check out our latest video on the U.S. dependence on Chinese batteries.